Welcome back to Taking Care of Business, Episode 3, the podcast by Allsopp and COO, the leading real estate agency in Dubai and largest real estate agency in Dubai. Today I'm joined by Lewis Allsopp, the CEO of Allsopp and COO, and I have a very special guest, a gentleman called Matt Dixon, and he's the CEO of EVI.io. Welcome, chaps.
Thank you. Pleasure to be here. Thank you.
We'll do a very brief introduction first. I think you all know Lewis by now. He's been with us many weeks.
35 years.
35 years he's been with us. He's been with me 35 years. We'll do a brief introduction. So Matt, CEO of EVI.io. Tell us about EVI and yourself.
Can I ask a question first for anyone else? What does EVI stand for? What is it?
Okay. I recently did a master's degree at Brighton University in the UK. One of the things that we learned was about economic value added, which is a well-known financial acronym for EVA, or for EVA. So with EVA, we use a lot of artificial intelligence and machine learning. So we combine the AI from artificial intelligence with EVA, and that's how we came up with EVA, because we use artificial intelligence to provide economic value through rating other cryptocurrencies. So that's basically what EVA is all about.
Wow, okay.
So we've done a brief introduction, Matt. Tell us a little bit about EVI, your role as CEO. So if my understanding is it's in its infancy still. Is it something that anyone can buy today?
Yeah, well, we're a token. We've not yet gone to IEO, which is initial exchange offering. That is coming very soon. It's very close on our next milestone, really. So for the time being, we're a token, which is really a pre-listed token. So we have a price. We're hoping and expect that price to increase upon listing. EVI is basically a cryptocurrency which rates all other cryptocurrencies.
Okay.
So there are 8,000 plus cryptocurrencies in the market, and there's very little information out there. And just to step back a little bit, back in 2008, the reason for the financial crisis, certainly in my view, was the fact that the ratings agencies were biased. They were effectively being paid to rate collateralized debt obligations, mortgage securities. They rated them as AAA securities, the highest rating possible. And the constituents of those, the mortgages, were actually what they called ninja mortgages, no income, no job applications. Yeah. So they were putting mortgages together and selling them as AAA rated securities when they're actually high risk securities. The reason they did that was all obviously about money being paid. So the rating agencies, in my view, were biased back then. And so now we have all these 8,000 cryptocurrencies. We felt there needs to be an unbiased way to rate and to value the cryptocurrencies. And so we put together a decentralized rating system, which is going to be a universal system that we believe everybody will accept, because it identifies underlying value of the cryptos. It does it in a decentralized way. So we don't have a panel of so-called experts doing it that can be biased, that can effectively be paid to produce ratings. We put together, I say we, it's led by Professor Andros Gregorio, who is an eminent professor within the field of ratings and research. He's actually done 80 peer-reviewed academic papers he's had published. He's an advisor to the Bank of England, and he advises them on risk and liquidity, all those things that really matter when you look at ratings.
So can I ask a question about the ratings? So the rating system that you're going to get set up, is this AI that's working on them? How do you gauge which is a good crypto to buy into and what's a bad? How does that work?
Okay, it's a multi-factor system. We started off with 6 factors initially, and it's actually grown now to, we're calling it an infinite factor now, because we with the research team we've got a very powerful research team. We've got top professors from top universities. In fact, we now have joint ventures with 2 universities.
Okay.
We've got Brighton University in the UK, and we've got Peking University in China, which is a world top 30 university. And we're harnessing their research capabilities to bring to EVA to advance what we're doing. So we do use artificial intelligence. There's a number of factors, and the number of factors are increasing. But we use artificial intelligence. It's an ideal means to hone those factors, to look at which factors are more important in developing a rating, which are less important. So it's not humans who effectively can be biased, can be influenced. This is machine learning. This is artificial intelligence. This is really looking at which factors are most important. And it does this in the way with artificial intelligence, the way a mind works, to keep considering new factors that come in. And so it continually advances, continually improves. So if you think about the chess computer back in many, many years ago, and Kasparov and Deep Blue, there was a time when no computer could beat a human mind. But artificial intelligence has advanced so much now that computers can beat the best chess players in the world. And that's why we're now harnessing the power of artificial intelligence to improve and grow and evolve our rating system to be the best and continue to be the best. Because it's not just as though we're producing some software and leaving it, it continually evolves.
So that's exciting. So you've got two aspects to AI. You've got the rating system and you've got the coin. Are they linked at all, or how does that work?
Yeah, I mean, it's a very efficient way.
Can I just add 1 second? I can imagine you'd be incredibly popular with all the other cryptos or coins or tokens on your platform if they're not rated particularly highly well. It's I'm sure they'll be really falling in love with EVI.
Well, we have had a number of approaches already, people wanting to be rated.
Yeah.
And that's a good thing about it being unbiased, because we actually don't have any input from our board, as it were, from the researchers themselves. We've created a computer system to rate. So it's not as though people can say to us, oh, you need to rate us better, or we'll pay you to rate us better. And that was the problem in the past, that there were potential biases, as there always are with human interactions. But when it's a computer system that we've developed and it's evolved using artificial intelligence, then we can't be biased. So if a coin is rated well, rated highly, then that's just the way it is. And again, if it's not rated particularly well, but it's useful for people, because if they're not rated well, they can actually look at the different factors that we use, and it can be used to improve the ecosystem. So they'll know exactly what areas they need to improve to make their coin better.
The ultimate purpose, though, is designed to help the investor make better informed decisions, or is it more to do with coins in terms of the coin itself and how?
Yeah, what I love about the business is it actually helps everybody. There's nobody who loses out. So with trading, sometimes you get winners, you get losers. What we're trying to do with the business that we have, I think it's a very ethical business, because investors are better informed. It empowers investors to make informed choices, to identify value that's going to be good for them in the future. We're not looking at sentiment-driven decision making, where just what's the theme of the day, what's the fashion of the day. We're looking at real underlying value. So it provides value to investors, but also it provides value to the tokens that we're rating, because it helps them identify shortcomings in their particular protocols, the way they work within the various factors that we use to rate them. They can identify where there's perhaps weaknesses, and so it improves the whole ecosystem.
Yeah.
It's good for investors. Basically, there are no losers with our business.
Okay. So I'm going to ask you some questions now that I think many of the audience that are not crypto experts or Bitcoin experts want to ask. So you are the man, you're the mathematics genius. I didn't know this before coming onto air, but crypto is very much mathematics, isn't it? Is that how it works? We talked about the blockchain before. So I've got a couple of quick questions for that I want to ask. So people talk a lot about mining, and people they make themselves millionaires over becoming a miner. Can you give me a basic understanding of what a crypto miner is? Because we didn't fully understand it.
Okay, with cryptocurrency, it's basically a distributed ledger. So it's just a record of transactions.
Yeah.
And being distributed means that it's held on many, many computers.
Okay.
So you've got these distributed transactions. Now, when somebody new comes along and does a new transaction, that has to be recorded.
Okay.
So a miner's job is to record those transactions and to create new blocks.
Okay.
So that's blockchain. So there's a chain of blocks, and you're creating new blocks with a number of transactions.
So that person does the transaction. The ledger or the miner's job is to go back and make sure that it all links up to secure the transaction. Is that how best way to describe it?
Yeah, it's basically to record the transaction
Okay.
Within the block. So by doing that, it's not so anybody can easily do it. There's complex mathematical calculations that go on, which is why it's called mining, because there's work involved to solve these mathematical problems.
What type of work then? Give me an example. What do you have to do? Is it 1,000,000 times 1,000? What happens? What's the mathematics you give in a basic term?
The mining rewards are different for every token.
Okay.
They're not all mined, by the way, but
Yeah.
the ones that are mined, the different rewards. And their mining rewards typically halve every few years. So
Okay.
Bitcoin, for example, at the moment, there's 18.7 million have been mined already. The total that will ever be mined, the total ever in existence, will be 21 million.
Okay.
That's the cap on it. And that's, just to digress slightly, that's one of the things that makes Bitcoin so interesting and cryptocurrency in general so interesting, is because there's a limited supply.
But how can I, as a miner, this is what I'm trying to get, do I have to work a mathematical equation out to win the commission? How does that?
Yes, basically,
Okay.
you're solving a mathematical problem. Effectively, that's what you're doing, which takes a lot of energy, a lot of electricity to power your computers to
How
solve that
much
problem.
electricity does it require?
Okay, for Bitcoin at the moment, the Bitcoin mining takes the same amount of electricity as the whole consumption for Switzerland, for example.
Wow.
So it's a massive amount of energy.
Wow.
And that's why miners these days tend to be situated in cold countries.
Yeah.
You find them in the Arctic, in Norway.
And how many computers are we talking about at a time? 10, 20, 30, 40? More than that?
Miners typically have big banks. They're like farms. And if you think about Matrix, if you remember the pictures of the computers there,
Yeah.
it's banks, thousands upon thousands of them, just in big warehouses, whirring away. There's massive amounts of heat they produce. So there's a lot of cooling, and that's why they run these mining farms in cold countries, because there's less energy costs for the cooling.
My laptop gets hot when I'm playing Football Manager. I guess that's a bit different.
Well, imagine a million of your laptops, the energy they would use.
The last 12 months have been quite fascinating, hasn't it, really? Obviously, we've had the lockdowns in multiple countries, and there's been a huge surge in appetite for people investing, whether it be it stocks or even crypto. And obviously, we've seen a huge rise in Bitcoin in particular in the last 12 months. I think, was it last March, $6,000? I can't remember, not sure off the top of my head. And now we're at 55,000.
It was at 61 at one point or higher.
53 today, 53 something today, but it's actually entirely in line with expectations. So we follow that. But we're not here as financial advisors to tell people where we expect it to be in the future. We're here to identify value. But yeah, Bitcoin's been really interesting. Crypto in general has been interesting.
But where's the surge come from? Because obviously we're seeing more and more now that there's a realization with government entities or that crypto is here to stay or Bitcoin is here to stay. What's happened in the last 12 months where we've seen this huge surge of this new appetite for people to get involved in a crypto? What's that down to?
I know people who made a lot of money before the peak in 2017, 2018. That was really retail investors getting on board. So I know people who knew very little about it, probably smarter people than me at the time, invested and bought just a few £100 worth of Bitcoin in the very early days, and are now worth millions. They were the very early adopters, the retail wave, as it were. Now we're getting institutional interest. So you've got the likes of MicroStrategy invested $1 billion into Bitcoin. Elon Musk, we've all heard these names, investing massively. You've got Morgan Stanley getting involved. You've got.
Does that just bring confidence when someone like Morgan Stanley, will that pump the value because you're Joe Public, like Lewis Allsopp would say, I think it's time to invest in Bitcoin because Elon Musk is coming? Is that what it does, like the PR behind it as well?
Elon puts a tweet on, everything goes up. He tweets something.
Is it Dogecoin? Is it Dogecoin?
Dogecoin.
Yeah.
They call it Dogecoin. Yes,
What happened with that? So Elon tweeted, and what did it go up from to? Do you know what the...
Well, Dogecoin was interesting because when it first came out, it was actually made as a joke coin.
Yeah,
and that was Dogecoin.
It was a meme, wasn't it? It was pictures of pictures. I remember what it was.
It's just a joke, but it's actually become something serious now. It did actually raise quite a lot of money, and they actually put that money to good use in developing the token.
Give me an example. What did it launch at? And do you know what it was up? Would you know or not?
Yeah, I can't remember the prices offhand. We did that's all done by computer for us.
But it was people made 1,000% ROIs on the coin.
It's like retail now. We're talking about retail. We're talking about a person sitting at home on their phone, putting whatever it might be, small or large amounts, not knowing a great deal, which is drove this surge because. The Dogecoin thing it seems to be like quite a young generation of people found it quite funny.
Our little brother messaged me and said, "I've just put £300 into Dogecoin," and he made £1,000 in like a day. And I was like, "What is Dogecoin?" Then it come out the next day. Obviously, the younger generation obviously knew what this was.
Yeah, there's so many people now. This is one thing we're trying to get away from is sentiment driven because a lot of people can make a lot of money, but you can lose money very quickly as well, which is why I think ratings is needed. Because you don't just want to follow the fashion of the day, the sentiment of the day, because as many people, you hear all the stories about how much money people made,
You never hear the stories about what people lose. That's the problem.
Exactly, yeah. But there are great stories. I mean, Alice Coin, which is I think it's a NFT token, went up 60,000% in one day.
So give us an example. You put £1,000 in, it's £6 million. Is that right? I think it is.
Yeah,
it's 6 million.
Wow, that's a good day's work, isn't it?
Yeah, I'll have to work out the maths on that. It might have been more than that.
So obviously you're spending a lot of your time at the moment in Dubai, or some of your time here in Dubai.
Yeah, we love Dubai.
Yeah.
I mean, we started in the UK.
Yeah.
We are registered with the FCA.
Yeah.
We've actually been engaging with the FCA on trying to help them further regulation within the crypto sector. We do a lot of business in Dubai, and Dubai seems to us to be the center of everything.
Yeah.
We're also, one of the markets we really want to break is the Asian market, particularly in China, which is why we did the joint venture with Peking University. Professor Andros is actually a visiting speaker there, and we now have their Dean of Peking University now works on our research team as well. So it's great to harness that research, but Dubai is the center for us. And what we love about Dubai is just the way they're so forward thinking. They've already grasped the nettle. They realize that blockchain is the future in so many businesses. It makes business more efficient. It makes business quicker, more profitable. There's so many benefits, and Dubai is great at recognizing that.
So when do you think we'll see some form of
normality?
Blockchain or crypto in Dubai? Because obviously we're a Dubai real estate podcast. We've got a lot of clients on here, and there's a fascination with that. But when do you think Dubai will start embracing that? Be it yourselves or someone or another?
DMCC, they're already now starting to regulate cryptocurrency. So that news just came out. It's fresh off the press.
Okay.
We're one of the first to be. The application is in. Our lawyers are working on it. So we hope to be one of the first regulated cryptocurrencies. It will be huge. We believe it will open the floodgates because our crypto, EVI, touches every other crypto in the world. If we're rating all these other cryptos using a decentralized system, which is unique and it's what's needed, the use case is just absolutely universal. And to get it regulated in Dubai, it will open the floodgates to institutions to our token as well. So, how
do you think crypto or, again, the blockchain can play a part in the future of real estate? Not just here, but in the world, because we were talking off air a little bit earlier about typical transaction times, and in some instances it can take 4 months in Dubai, and obviously probably the same, if not a bit more, in the UK. The conveyancing process system it's incredibly painful. What sort of examples could you give where this could play a part in the future?
There's so many different areas. The good thing about blockchain is it's cheaper, but in particular it's faster. So just a very simple example, we pay for a lot of media services around the world. Before crypto was widely accepted, we used to have to pay for those services in conventional fiat, pound, dollar, euro, whatever. We go to our bank in the UK, we make the transaction, there's a cost for that transaction, and then there's also a currency transactional cost, which is actually very high. So we want to transfer $10,000 somewhere, it actually costs us probably about $11,000 or even more by the time it's done. So it's actually a very expensive way of doing things. But then when we're paying for media services, we have to wait for 2 days for it to be confirmed their end that they've received it. So for us, fiat, the traditional conventional banking system, is very archaic in terms of money transfers. Nowadays we transfer in Litecoin, it happens in 3 seconds. We've transferred it. We can verify the person on the other end has received it. Not only do we don't need to wait for them to say they've received it, we can actually see and verify because it's distributed blockchain, distributed ledger. So we know they've received it, they can start work straight away.
And they can't withdraw that once it's been sent? Is that possible or not?
Once it's been sent, it's sent.
So a bit like when you send money from your bank account, obviously there's no way to go and give me that money back. You can't do the same on any type of...
That's right, you can't withdraw it. So I can't send you money and then basically withdraw it. So you haven't...
I've changed my mind.
Yeah,
I want that money back.
Yeah, give me that back, please.
So with obviously involving crypto and blockchain with real estate, I guess we require the institutions or companies to have some form of understanding or knowledge or buy-in to make the process a lot easier.
Yeah, I mean the banks are becoming more crypto friendly. The banks haven't been crypto friendly, but they're beginning to now see that they're going to lose a big share of the market if they don't get involved in cryptocurrency. So not only the banks, but the national central banks are now adopting cryptocurrency. They're developing their own cryptocurrencies in terms of digital currency. So you will see China maybe the first one. Switzerland, Saudi Arabia, Dubai, they're all working, even the UK, are working hard now within the central banks to develop their own digital currencies, because
Didn't they, at one point though, I mean, I'm sure this is still the case, a lot of banks saw crypto as a threat because obviously there's no transactional fee. Are they now trying to find a way to make it mold within what they're doing because they can't hide away from the fact that it's going to happen? Is that what you're seeing?
Yeah, at the moment we have basically decentralized currency. So Bitcoin, all these currencies are decentralized. Now what they're building are centralized cryptocurrencies. So there will still be demand for the likes of Bitcoin and those cryptocurrencies, which are all decentralized, because a lot of people don't want centralization. They've seen.
But is centralized just going to be a digital version of cash? So it's still within the system.
That's my personal worry. That's my worry. Yeah, that's why these other cryptocurrencies will still be of value. So the whole reason Bitcoin came into existence was the financial crash of 2008 and a loss of confidence in the traditional financial systems.
Because more money was printed and made more liquidity, the value of the.
Yeah, the failure of the rating system and the almost infinite supply of money. So this will have an impact at some point, and this money printing that's going on is what's driving asset prices at the moment. So we're seeing the benefit of that in property prices and in all risk assets. Actually, that is what's driving prices at the moment. So whatever the ratings agencies say, whatever anybody says, this money has to flow somewhere, and it's flowing into the likes of property.
It's brilliant for us.
Would it in the future? Do you see the transaction times for property transaction being a lot less involving the blockchain, and would it be cheaper as well for someone to buy a house in the future?
It'll be cheaper and it'll be quicker. Blockchain speeds everything up. You can have what's called smart contracts. So Ethereum is, there's a lot of Polkadot Ethereum. There's lots of currencies that now use smart contracts. And these contracts, you can have a lot of set criteria that need to be fulfilled for a contract effectively to be implemented. And that's ideal for property transactions. So things now, mortgage applications, it takes time to verify income, to verify people's identities, whatever those processes are within mortgage companies. Those things should be almost instantaneous. And once blockchain is really implemented fully within institutions, and that includes the mortgage, that includes the banks, as it becomes more and more implemented, it'll make transactions quicker and quicker.
So it would literally just be Lewis also wants a mortgage, click a button and all his information instantly come to you if given.
That's how it will be, and I think we'll see that. I don't know how long it will take, but it's beginning now. So nothing happens overnight. So we've seen
Do you think within 10 years is reasonable?
5 to 10 years, things move. Things seem to advance more and more quickly, don't they? So we're already seeing it progressing. So people need to jump on now, otherwise they get left behind. And it's the same with cryptocurrency. People who could have bought Bitcoin at just a few cents, But
that's the reason Bitcoin doesn't interest me, and why, if it does interest me, is that the return on investment for me, talking about Bitcoin being at 56,000, if it goes to 100,000, you're only doubling your money. I know it sounds only, but in the grand scheme of things, I could put 10% in a property, and a property value.
Different people saying that, it could be millions one day. You just don't know.
That's you do never know. But for me, what interests me as an investor, if I come in a coin, let's say at 0.49 cents, if that's what you said it was, and that goes to $10, $20, $30, whatever it may be, your ROI is insane. But that's the risk, isn't it, of going into a smaller coin? But the risk and reward factors there, it's made a lot of people millionaires, I guess.
Do you think someone one day, obviously it probably will happen one day, will physically end up buying a property with cryptocurrency?
There's no doubt. I mean, transactions are now taking place. You can rent properties in London using cryptocurrency. You can go to a car showroom. They're now collecting taxes in certain parts of America in cryptocurrency. So it's just becoming more and more widely adopted. You can load cryptocurrency onto your credit card and just spend that way. So
the message to everyone is start learning, because this is the future, about having an understanding of crypto and being involved in it, because
it's gone beyond the point of no return now. So basically, if you don't start adopting, you will get left behind. Now is the time to invest in these things. But again, you need to be informed as to where to invest, not just anything, because some of those things don't hold real value. Some of them are just basically hype and basically the latest sentiment, and that worries us, because investments shouldn't be purely sentiment driven. Obviously, when you're buying a house, it's sentiment because you love the house.
Correct.
But you still look at the underlying value, that this is solid bricks and mortar, this is going to appreciate in the future. And that's what we're trying to identify within cryptocurrencies. It's not just this looks good, but what is the underlying fundamentals? What's the foundation that you're investing in? And that's what eBuy does.
And it's likened to digital gold, crypto in general. So you're taking a longer term view, you're going to benefit most of the time.
It
hopefully.
is. I mean, it's been even recently with some of the stock market corrections that we've had, some fairly modest corrections, but we've actually seen Bitcoin actually go up, and it's been a store of value. So now people are beginning to see it as real digital gold. And in fact, even gold on occasions has gone down where crypto has gone up. So people are really now seeing, because gold is, there is still...
Someone said to me, when they said to me, I listened on the radio, and they said the difference between gold and crypto, Bitcoin specifically, is Bitcoin, you know how many coins there are. Gold, there is an infinite amount. Someone could land on a new block of gold tomorrow, and that could be the biggest block that ever existed. So that the tight amount of availability.
Supply,
supply and demand. Yeah, it's crazy.
If you think about everything, all the monetary systems that have ever been used, whether it be gold, whether it be seashells, whatever it was they ever used, it's all based on supply and demand, limited supply. And people seem to get a bit lost in thinking, where's the value in Bitcoin? Well, the value is, as you say, it's the limited supply.
It's the same reason the property market is going up at the moment.
Exactly.
There's no properties in the market, so people have to pay more if they want to get on the ladder.
Okay, before we wrap up, just circling back to eBuy, with some point in the future, in the next couple of months maybe, you're going to be going on to some different platforms so people can actually physically buy. Can people invest today in eBuy.io?
Yes, this is pre-listing. There's a pre-listing price of 49 cents.
Okay. How do they do that? They want someone to buy today, watching this, and get in touch with you. How do they end up buying that?
Inbox us.
Yeah. But they could do that today. If someone could buy some eBuy tokens today prior to listing.
Yeah, I mean, basically, we've got a very active Telegram channel.
Okay.
People can go on there and they can just ask, how do I buy eBuy? There's basically a simple sign-up process. The due diligence, KYC, everybody has to do that these days, just to prove who you are, who you say you are. And then you can either buy using cryptocurrency, or you can do a bank transfer to buy using fiat.
And what happens? So if someone comes to you, sends you $10,000 to buy into your coinebuy.io, what would happen then? Would they receive in a digital wallet? Is that what happens?
Yes, basically when you do the sign-up process, and it's just completing the forms and the KYC online, it's a very simple process, takes a couple of minutes.
Yeah.
A digital wallet is created for you. Once you have that digital wallet, it's unique to you. It's like a bank account number, basically. We then, it's an automatic system, but basically the tokens, the eBuy tokens, are then transferred to your wallet. Now, because this is distributed blockchain, we are what's called an ERC20 token, and we're on the Ethereum network. So we would give you a transactional copy from the Etherscan network. That proves that your transaction has been done, that your tokens have been transferred to your wallet. Everybody in the world can see that that transaction's taken place. They don't know it's you, because only you know your wallet, only you have your private key. So it's personal to you, but everybody can see it's there, but they don't know who it is. So
the last question I'm going to ask before we wrap up is, this is the exciting bit for the investors. They buy in at 0.49. That's what they're buying in cents. So when it launches, we don't know what it's going. We don't have a specific price, but we're hoping it's going to be an increase in what they're going for. But my question is that will they receive the monetary value on the platform that you go on, so they can cash out on day 1, day 10? How would that work?
Yes, investors coming in now, basically they'll be able to encash as soon as they want. So it's basically like an exchange. So when you do an IPO, everybody knows about IPOs. This is called an IEO, which is initial exchange offering. Once we're on that exchange, that's basically a trading exchange. So if you own eBuy tokens, you can effectively just sell them on the exchange and receive the money for them. So you can trade them, you can buy them, sell them, do whatever you want. So
very exciting.
Very, very exciting. Well, guys, thank you very much for this week. Thank you, Matt Dixon, for joining us, and Lewis Allsopp.
Again.
My name's Carl Allsopp. We'll see you next week. Thank you.
Thank you.